Welcome back. We wanted to take just a moment to recap some of the big economic events we've seen this past week. There has been a lot of them. To start at the beginning of the week, New York Fed's Empire State plunges in January. That's the lowest level since the pandemic. New York State Empire Manufacturing declined to negative 43.7. Shipments fell negative 31.3. Unfilled orders declined to a negative 49.4. Negative numbers indicate economic contraction. One of the themes this week is very poor manufacturing data. Here we can see general business conditions, negative 43.7. That's the headline number. New orders down 40 to a level of negative 49.4 and shipments negative 31.3. General business conditions, we can see this is the lowest low we've seen since the pandemic of 2020. Compare 2008 to present date. In 2008, 2009, we saw the lowest low of negative 34.3. Today's number, negative 43.7. Certainly not good news in the manufacturing, but there is good news in retail sales. They jump in December. Good holiday shopping season shows strength in the U.S. economy. On a year-over-year basis, up 4.8%. That's the highest high going back to the beginning of last year. Now, on a year-over-year basis, there were certain categories that certainly shined. Motor vehicle sales, 10.3%. Non-store retailers, 9.7%. Electronics and appliances, 10.7%. Those are on a year-over-year basis. We can see the retail sales, each line represents a different category, and they are starting to trend to the upside. The top three categories include non-store retailers, that's internet sales, electronics and appliances, and motor vehicles as well. In addition, Fed's Christopher Waller advocates moving carefully with rate cuts. This is an interesting story. Federal Reserve Governor Christopher Waller acknowledged Tuesday that interest rate cuts are likely this year, but he said the central bank can take its time in relaxing monetary policy. He said, when the time is right to begin lowering rates, I believe it can and should be lowered methodically and carefully. He continued, in many previous cycles, the FOMC cut rates reactively and did so quickly and often by large amounts. This cycle, however, I see no reason to move as quickly or cut as rapidly as in the past. What we're going to see in just a moment, Fed funds futures have moved away from the idea about interest rate cuts. In other news, housing starts rose in December as mortgage rates remained elevated. The number of housing starts ticked up in December despite pressure from high mortgage rates. It's a bit of good news for the economy overall. On a year-over-year basis, we can see the blue bars, that's total housing starts up 8%. The red, housing starts single family up 16%, 2 to 4 units up 78%, and 5 units or more down 10%. Now we can see our housing starts. These are for single family homes, white line S&P 500. This is the highest high, well, the second highest high, excluding last month's report, since mid 22. So certainly housing starts, it's a leading indicator. It's good news for the housing market. Bad news for manufacturing. Philadelphia Fed factory gauge remains in negative territory for the fifth straight month. The Philly Fed said Thursday its gauge of regional business activity was reported at negative 10.6. Any readings below zero indicate deteriorating conditions. This is the fifth straight month in negative territory and the 18th out of the past 20 months. Now, Philly Fed manufacturing survey, certain categories certainly do not look good. General activity, negative 10.6. Inventories, negative 14.6. Unfilled orders, 18.5 negative. 17.9 negative on new orders, and then 27.6 below zero. Prices received, delivery time. General activity, we can see that's a negative 10.6 level. That's the fifth consecutive month below zero. Inventories, another bad number, negative 14.6. We can see this is the lowest low since early 23. New orders, down to a level, negative 17.9, the second worst number we've seen this year, or I should say in the past year. Unfilled orders, negative 18.5. This is technically the lowest low since mid 22. And then certainly delivery time is probably the worst category, negative 27.6. That's a multi-year low. Existing home sales tumbled to the lowest level since 1995. Sales of previously owned homes tumbled 1% to an annual rate of 3.78 million units. It marked the slowest pace of sales since August of 2010. These are 25-year lows. On a month-over-month basis, we can see the inventory negative 11.5%. Also, single family homes, this is housing inventory, down 13%. Inventory has really dried up. Existing home sales, now this is the number of units, this is the headline number. It's at a level of 3.78 million. It's the lowest low in several decades. Now, in terms of the March Federal Reserve meeting, we have one in January, the next one in March. There was a 77% chance of an interest rate cut mid-January, yeah, January 15th or so. We're now only at a 54% level. So we've really moved away. Now the white line is the S&P 500. Notice a pretty strong correlation. When there's a higher probability of an interest rate cut, stock market goes up. When the probability of a cut decreases like it has now, historically stocks have gone down. Fed funds futures overall, we can see the red bars represent the chances of an interest rate cut. The yellow bars represent a chance that the chances that the Federal Reserve will not cut interest rates. There is now, in terms of the March meeting, a 45% chance they will not cut rates. Believe it or not, just a couple days ago, we were almost, we were actually below 20%, 19% chance. That's now almost 50% chance. Certainly, there's a lot of unknowns, so to speak. Now, next week, more unknowns. Big numbers next week. S&P Case-Shiller Home Price Index, ADP employment, factory orders. It's a Federal Reserve interest rate decision next week. Also, non-farm payrolls, unemployment reports. So we certainly have a lot to look forward to, and we thank you for joining us. We're going to be sure to update you with any and all significant changes along the way. We hope this has been helpful. We look forward to seeing you back soon.